Hi everyone, this is just a quick video to answer some specific questions. Should we re-enter a stock, whether we sold it on profit or our stop loss got triggered and we sold it at loss? Should we buy it back? When to re-enter? When should we buy it back? And some examples. Now, this is of course just my views. I'm just sharing my views, not financial advice. It's more relevant for the stocks that you're holding long term, not so much for the intraday trading. Obviously, no one knows when the stock is going to go up or down. All we try to do is find a good entry with good risk to reward ratio. So essentially, if we are wrong and if we lose money, we lose a little bit. If we are right and the market moves in the direction where we thought it would, then we make more than we would potentially lose. So essentially, if you have a good risk to reward ratio, then over a number of trades, you will be profitable. You won't be flipping a coin and holding and hoping that the stock hopefully will go up. Now, as I said, no one knows when it's going to go up or down. All we can do is assess based on technical analysis and fundamental analysis. So, to give you an example, my favorite example, let's say you are a major investor in Qantas. You are a financial partner in Qantas. Okay. Now, if you find out that the oil prices, the gas prices are going up worldwide, and it looks like they will continue to go up, which means the airline will have to pass on the additional cost of fuel to their customers, which means some of the customers may not be able to afford the expensive tickets and they may hold their travel back, and your sale may be impacted. If your sale is impacted, then of course your bottom line, your profits will be impacted as well, and your stock price may go down. So in that case, if you see that is likely to happen, you will try and sell your share or your financial interest before it actually happens, right? So that's more of a fundamental analysis. So you try to look at the fundamentals, the profit and sales, cost, revenue, that sort of stuff. And based on that, you decide when to sell. Now, let's say you sold it, and then 3 months down the track, you still believe in the business itself. So Qantas is still buying more planes and servicing the planes they have as they should. Everything's on track. COVID is calming down. People are starting to travel. War situations getting better. Oil prices are in control. They are starting to come down. And you notice that it's likely that now the stock should be where it used to be before it fell, and you can take an entry, a position, and try and go long and buy some stocks, buy your financial interest back. That would be an example of buying back on fundamental analysis. So essentially, you are not looking at it as a stock, but as a business. And you say, okay, it looks like based on what's happening around the world, or it could be a news event that's just specific to that company. It's likely that it may go down, or it looks like it has reached a point where it will have trouble going any further, and you may sell. At the same time, the business is still strong, solid. It may go through a little bit of a correction, and then you feel that the price it's trading at now is a reasonable price to get back in, and there is a potential for a long entry. So that's fundamental analysis. If we talk about technical analysis, I just have three examples. So AKE, WHC, and BOE, these are the three that I bought recently. So I just thought I'll slap them in here just to give you an example why I got back in them. Now, for Whitehaven, let's look at Whitehaven first. I've been following this since a year and a half now. So WHC, NHC, YAL. These are the three of the larger caps coal stocks that I have on my watch list. And what I've done, I've just put some basic lines in here, right? So see this green line that used to be resistance. So see how the stock had trouble breaking this. But once it broke, it just broke out, right? And then coming back here, around the same level, it didn't fall any further, but it started bouncing, right? And then it broke that, so it's not as clean as I'd like it to be. So it broke resistance, so yeah, resistance, and then came back up as if it's nothing, just gapped up one day, and then ping-ponged around there, and it's sitting around here. Now, I've also put this grayed area. Now this is the sort of range that it has been ping-ponging in. So it doesn't touch top and bottom every time, but it's within this range. So it's range bound at this stage. This line is important. So see how it has trouble breaking this. It tried to break it here once, twice, 3 times, 4 times, almost the 5th times, and it's coming back. So the risk to reward that I was talking about, let me put another line here. So this is the highs based on this year's daily chart. So it tried to break this number of times, couldn't, pull back, tried it one more time, couldn't, and it's around here. So if I was to take a long entry, the other thing is I've been watching it defend 7 pretty aggressively for last 2 days. It broke, but it defends it fairly aggressively, and the volume comes in. Plus 7 as a whole number, it's always a support and resistance being a whole number. So the trade I've taken is I took entry just below 7. I think it was 697 or somewhere around there. Now the risk to reward is if it breaks below this, then I will sell half. If it breaks below this, then I'll be out. Okay, for now. That means I'll take a loss on this, and that's it, nothing more to it. However, so that. Look at the gap between here and here. Obviously it will be done in 2 trades, but let's just say I bought at $7 for argument's sake, and I will sell at $5.50. Okay, let's just say that. So that's $1.50 loss. However, if it breaks this and continues to go up, my sell would be around here, because this is resistance. I'm not going to hold and wait to see if it breaks or not. It may not go all the way there, so I may sell around 10. So $7 to $10 is double of the distance between 7 to 550. So this would be a 1 to 2 risk and reward ratio, and then as a bare minimum, that's what you're aiming for. This is a very I'm trying to dumb it down so everyone can understand. I will not be following that exact trade. I'll be buying in chunks. So I've only bought maybe 1/10 of my position here, maybe 20%. So about 10-20%, I'll be making a position based on whether it goes down or up, how aggressively, this and that. But my average would be around 7. And when I'm selling, I would sell most of it before 10. And I'll let some of it let run, see if it goes further. So that's purely technical analysis. The risk to reward ratio makes sense if you follow the strategy, if you follow technical analysis, if you follow risk and reward consistently over number of trades, then you are likely to make money over long term. So that's that. There is also a fundamental analysis aspect attached to it. WHC, if you follow the stock, you would know that it sells a fair bit of coal to European countries. December to February or November to February is winter in that region, and so I am sort of anticipating a little bit of demand there based on that. If you look at last year, since August it started to go up. Doesn't mean it will this time as well, but that's just one more added factor in decision making whether to go long or short. So there is that last year's price action on our side as well, that if there is a good chance this will repeat itself, because it's based on seasons, it's based on hard data. So that's one example of technical analysis as well as fundamental analysis. When would you re-enter? as I said, no one knows. You could argue, why didn't you buy it at 6? So I was still following and wanted to see if it bounced back from 6 or not. Should have bought between 6 to 7. However, as I said, you have to factor in everything. The way US market has been since last 3 weeks, so best part of September, it was very bearish, not as much bullish. It is still bearish, but what's the best time to buy? When the price is down and it is getting pushed down, or when the prices are up? Obviously, it's better to buy when the prices are down and getting down than to buy them around when it's going up. That's time to sell, in my opinion. Okay, so that's Whitehaven. Let's look at AKE. I bought AKE as well. So again, it's not, you can't just take one thing. You can't just look at the chart and say, okay, long or short, buy here, sell there. So you have to understand what the company does, what it has been doing. So AKE and IGO and a little bit of MIN are the 3 stocks in large caps that I follow for lithium. Lithium as a sector is struggling, as we all know. So AKE, let's draw some lines again. Oh, I've already drawn them. So this is my demo account, by the way. So if you guys are wondering, this is a demo account in IG. I use Spark, which is this one. But yeah, this one has a subscription. It gives you a lot more data, a lot more details, but you are paying about $200 a month for it. Anyway, so I digress. So I've drawn the line here, which is the resistance. You can also say it's the highs for the year. So as you can see,